Well, let's get started, folks. Where I am here in the United States, it's snowing in central Pennsylvania, so it's a nice welcome change for the weather. My name is Danny Seabright. I'm the president of the US-UAE Business Council, and we could not be more pleased to participate with the U.S. Department of Agriculture and the USDA team out in Dubai. They approached us a number of weeks, a couple months ago now, to talk about the Export Credit Guarantee Program, the USDA's Community Credit Corporation program that underwrites extended eligible financial institutions in the U.S. to approve foreign banks that issue dollar-denominated irrevocable letters of credit in favor of U.S. exporters. So this is a really important program. We're really happy to be able to offer this platform to bring it more detail about it to all of you this morning. In the session, you're going to hear background from various experts and officials at the Foreign Agricultural Service, as I said, and at the USDA's Credit Programs Division. You'll also hear from the U.S. Livestock Genetics Export, Inc., live cattle exporters and Mashroq Bank about their experiences using the program in the past. We will then open the floor to a Q&A discussion. I'd ask that you keep yourselves on mute during the presentation portion of the webinar, and then use the chat function to submit questions or raise your hand or what have you if you want to be acknowledged to be able to speak. We'll now kick off the session with remarks from Valerie Brown. Valerie is the Regional Agricultural Counselor at the Foreign Agricultural Service Office in Dubai. Valerie, welcome and pleased to have you. Thank you for joining us this afternoon. For all of us early in the morning here at 8 a.m. in the United States, the floor is yours.
Thank you so much, Danny. First, I want to recognize you and the council. Thank you so much for collaborating with us to do this. It's extremely important to our office and the relationship that we have with you. So thank you so much to you, Danny, and the council. I also want to recognize the attendees here in the UAE and within the region. It's imperative, and it's for a person such as myself, who I just arrived here. It's a welcome that is unexplainable, because it's nice to see how we work together. It's nice to see partnerships. It's nice to see collaboration. So I feel as though I'm walking into an ideal situation, and I am grateful to you and to your council for that. As I was saying, I am new. I arrived a month ago. After quarantine, I've actually been on the job technically for 2 weeks. And it's phenomenal. It's amazing being here in the UAE. Our office is looking at promotions. We look at policy. We look at potential opportunities. This is what we do. We're the who, what, when, where, why, and how for U.S. agriculture in the region. And I have an ideal team that I am working with, and super excited about that. I can't stress enough the importance of this activity. We are here to enhance the U.S. GCC food and agricultural trade relation. The United States enjoys a robust trade relationship with GCC. And for us, it's totaling in the region about $3 billion in 2019. And we're truly grateful to the UAE government for lifting their ban on U.S. live cattle exports. And we encourage our friends, our importers here in the region of live cattle and dairy farms to benefit from the USDA export credit program to source their cattle from the United States. I would be neglectful if I did not point out that I am not the only one new here in the region. I also have the person who technically they say he works for me, but I work for him, Lucas Blaustein, who is the deputy in the office, the attaché. And Lucas, if you don't mind taking a minute just to introduce yourself to everyone so that they know that we are here to assist, to help, to support, and to cheer everybody on to success. So Lucas.
أهلاً وسهلاً. أنا اسمي Lucas. It is our absolute pleasure to speak with each of you here today. And thank you, Valerie, for the wonderful introduction and the wonderful overview of what we do. We do a lot of excellent work here in the Gulf, and we're excited to to be strategizing and building with all of you over the coming years. I also wanted to introduce my colleague, Mohammed Hamza, who has done just a phenomenal job organizing this, who was really responsible for getting the market access reinstated. Mohammed, if you just say hi so everyone can put a face to a name.
Yes, hello everyone. I'm very glad to be with you here today. You know, for those who don't know me, my name is Mohammed Hamza. I work for the Office of Agricultural Affairs in Dubai. I thank everybody for joining this, the webinar, and I really hope that you will get a lot of useful information from this, and you start using GSM 102 and import a lot of product from the United States. Please, if you need anything, any assistance from our side, don't hesitate to contact us anytime. We are here to help you all. Thank you.
Valerie, did you have anything else that you wanted to say?
No, that would be it for me. Thank you so much.
Okay, Valerie, thank you so much. I really appreciate it. If we could then turn to Jeff to talk about the U.S. cattle breeds, I would really appreciate it. I'm sorry, yeah, Jeff Albanese. Jeff is an agricultural marketing specialist in the U.S. Department of Agriculture Foreign Agricultural Service Credit Programs Division. In this capacity, Mr. Albanese administers USDA's credit guarantee programs. He is a career Foreign Service officer. His overseas assignments have included Kabul, Manila, and Geneva. Mr. Albanese holds a BA in political science from the University of Maryland College Park and an MA in international economics from the University of California, San Diego. Jeff, over to you.
Sure, thank you very much. And then I'll, along with my colleague, Tim Hunt, I'll present on USDA's export credit guarantee programs, GSM 102 and FGP. You had mentioned US cattle breeds. I won't touch on that. That will be left to another specialist.
Sorry, I had two Jeffs here. Sorry, Jeff, I had two Jeffs. That's why I had you in that. I apologize for that.
Right, I figured that could have been the case. And then I know, I don't know if Amy Slusher introduced herself. She's the director of our group. I know, Amy, you're on the line, correct?
I am here. Good morning, everybody. And I'll leave it with our experts, Jeff and Tim, who will take it away.
All right, I'll just share my screen here. And then, are you all able to see that?
Yes, Jeff.
All right, let me put it into the slideshow format. All right, great. So you can see the slideshow then.
Yes.
All right, so I'm going to present on the USDA Export Credit Guarantee Program, otherwise known as GSM 102. And then my colleague, Tim Hunt, will discuss the Facility Guarantee Program. So the GSM 102 Export Credit Guarantee Program provides credit guarantees to encourage financing of U.S. agricultural commodity exports. So of the two programs, this is the commodity-focused program, where the Facility Guarantee Program is focused on U.S. manufactured goods and services. So we have two programs, one commodity and one goods and services to set up or improve agricultural related facilities and infrastructure. So the GSM 102 program is a letter of credit driven program. All transactions need to be letter of credit based. This program mitigates foreign bank non-payment risk for US exporters. We are developing country focused. So we have countries in North Africa, the Middle East, UAE, all eligible destinations, or many eligible destinations for this program, as well as many eligible banking countries where the letter of credits could be issued. This program offers credit terms up to 18 months, and USDA will assume 98% of the non-payment risk. So we'll do a guarantee up to 98% of the value of the transaction. And under this program, we are focused on the export of US agricultural commodities. So only US agricultural commodities are eligible for export under this program. So there's 4 participants in any given transaction, and there are certain requirements for each of those participants. So we have the exporter, the U.S. financial institution, the UAE financial institution or foreign financial institution, as well as the importer. And so under the GSM 102 program, exporters must submit a qualification application with us. So it's a vetting process. Once that process is complete, to do a GSM 102 transaction, the exporter needs to have a firm sales contract with an importer for the purchase of US ag products. At that point is when the exporter would apply for the credit guarantee with us and pay a guarantee fee. US financial institutions also have a qualification required, so we'll also vet the US financial institution. This is the entity that's going to be confirming the letter of credit from the approved foreign financial institution or UAE financial institution. And generally, the exporters are going to assign the credit guarantee to the US foreign financial institution. And USDA is going to assume the foreign bank repayment risk. The foreign financial institutions qualification is also required. So Tim, he would be primarily vetting the foreign financial institution, the UAE financial institution. We have several banks that are already in our program and participating. And this is going to be the entity that issues the letter of credit in favor of the exporter on behalf of the importer. And so for our importers, there's no qualification required. So all that's required is going to be the firm sales contract with the exporter. So we don't have a specific vetting process for importers. And this is going to be the entity purchasing the US agricultural commodities. They are responsible for the letter of credit. And our destination country must be eligible for participation in our programs. We have many eligible destination countries. And another important item is that banks issuing a letter of credit do not necessarily need to be within the destination country. So an example of that is for a GSM 102 transaction, let's say it's a shipment of U.S. wheat financed by or facilitated by U.A.E. financial institution. So that wheat doesn't necessarily need to be shipped to the U.A.E. as its ultimate destination. So we're a regional program, and U.A.E. falls within the Africa, Middle East, Turkey, Caucasus, Central Asia region. So that shipment could be sent anywhere throughout that region. So a GSM 102 transaction of U.S. wheat facilitated by a UAE financial institution could have an ultimate destination to Algeria, for example. And so that would be allowable under our program. So our program participants also derive a benefit from a GSM 102 transaction. And so exporters have the ability to target markets with greater risk. They can expand existing export sales or establish sales in new markets. And they also receive immediate payment upon shipment of the goods from the US financial institution. And our US financial institutions are able to extend new credit lines with approved foreign financial institutions or add to their existing credit lines. They can expand business to include trade finance services. And they have the ability to lend up to 18 months tenor, with USDA assuming the vast majority of all the foreign bank non-payment risk. Foreign financial institutions have the ability to borrow for up to 18 months, potentially at reduced interest rates with the U.S. Financial Institution Services, and can extend new credit lines to customers or add to existing lines. Importers may receive preferential repayment terms from the local bank, but that's completely at the discretion of the local bank, so that's not a guarantee. And they have the ability to purchase high quality U.S. agricultural commodities. And so we can take a look at a GSM 102 transaction and one without a GSM 102 credit guarantee. So without the GSM 102 credit guarantee, the exporter is carrying 100% of the non-payment risk. The U.S. exporter could be reluctant to ship without prepayment from the importer, and the foreign financial institution may be unwilling to provide credit to an importer. And an importer's financing could have unfavorable terms such as shorter repayment periods or higher interest rates. But with the GSM 102 export credit guarantee, the U.S. exporter is carrying minimal or no risk when it's assigned to the U.S. financial institution. The foreign financial institution may gain preferential repayment terms with the U.S. bank, and importers may gain preferential repayment terms with their local bank. And so what does a transaction actually look like when it all comes together and happens? And so as mentioned, a U.S. exporter will establish a firm sales contract with an importer. At that point, the exporter is going to apply for the credit guarantee with us, while the importer opens a letter of credit with an approved foreign financial institution or approved UAE bank in our program in favor of the exporter. And the exporter would then assign that credit guarantee to one of our approved U.S. financial institutions. The exporter would then ship the goods, and the U.S. bank would pay the exporter. And then our approved foreign financial institution, or UAE bank in this case, would then make payment to the U.S. financial institution over the specified tenor period, which is up to 18 months. And that tenor period is selected during the application for the credit guarantee. And then the importer would pay the approved foreign financial institution or UAE bank according to the terms that they have established amongst themselves. So there are 3 costs associated with the GSM 102 program. There's the guarantee fee, which USDA charges and the exporter pays for. There's the cost of the letter of credit, and then there's any additional financing costs. And so the guarantee fee, that's levied by USDA and paid by the exporter. And we base that on country risk, the strength of the approved foreign financial institution or UAE bank, and as well as the repayment terms up to 18 months. Participants are able to benefit from approximately a $5 billion authorization each year. So each year we'll make available and take on up to $5 billion of credit risk. So there's plenty of room for us to do business. And I mentioned there's many destinations for GSM 102. And so we have approximately 135 eligible countries spread across 3 regions. And the region that UAE is a part of is Africa, the Middle East, Turkey, Caucasus, and Central Asia. And so UAE banks can facilitate transactions throughout that entire region. Then we're also divided into the Asia and Latin America region. And as I mentioned, any bank approved by USDA within a given region can issue a letter of credit supporting a transaction in any approved destination, so long as it's within that same region, the Africa, Middle East region. And so within the Africa and Middle East, Turkey, Caucasus, Central Asia region, we have several eligible destinations. And those are right here. So we have Algeria, Bahrain, Egypt, Iraq, Israel, Jordan, Kuwait, Lebanon, Libya, Morocco, Oman, Palestinian territories, Qatar, Saudi Arabia, Tunisia, the United Arab Emirates, and Yemen. So those are all eligible destinations where a UAE bank could facilitate a transaction and issue a letter of credit. And so our eligible commodities are consumer-oriented, intermediate, and bulk commodities. We do have a 100% US content requirement for those commodities, except for high-value products, certain high-value processed products, which we would require a 90% content value there. And so some examples of GSM 102 supported shipments in the region to Algeria. We've seen in recent years GSM 102 transactions for soybeans and wheat, Egypt as well, soybeans, yellow corn and dairy cattle, in Israel, soybeans and yellow corn, Lebanon, soybeans, Morocco, wheat, corn, soybeans, meal, other feed ingredients and DDGs, to Saudi Arabia, soybeans and yellow corn, and to Tunisia, soybeans, wheat, and DDGs. And so we have several approved banks within the Africa and Middle East region. So in the United Arab Emirates, we have 2 banks participating in our program. So Abu Dhabi Commercial Bank, as well as Mashreq Bank participate in our program. Then we also have a multilateral institution, AfricSim, based out of Egypt, the African Export-Import Bank. And then we also have banks in Egypt and Qatar participating in our program. And I hope I'm pronouncing that country right. I'm never sure how to pronounce that one, if it's Qatar or not, but I'll say that for now until corrected. And within the United States, so we can send around a copy of this presentation, but in the United States, these are all the current approved banks who are participating in our program. So there are many, and then you'll have a chance to see this slide again.
Thanks so
So
much.
how do you get started?
Go ahead, Jeff. I'm sorry. I thought you were
There's just a
finished.
few more slides.
No, go ahead. Go ahead. Go ahead.
There's a couple more slides, and then I'll pass it over to Tim for the facility guarantee program.
Okay, sounds great.
So to get started for importers, you would negotiate a sales contract with the exporter. As mentioned, there's no qualification application. The importer would also need to establish a relationship with one of the approved financial institutions. And if they are not working with a GSM 102 approved or participating bank, they would either need to work with one of our approved banks or have to see if their bank would be interested in participating in the program, at which point we could then vet that bank to see if it meets USDA's risk criteria for participation. So that's something we could also look into. And then the importer would work with the approved financial institution to issue the letter of credit And for exporters, they have certain items that they need to take care of during the qualification application. So they need to obtain a DUNS number, register on sam.gov, which are the systems that all entities doing business with the US government must register themselves with. They would submit the qualification application, negotiate the sales contract with the buyer, submit the request for the credit guarantee, and also pay the guarantee fee. And they would contact the US financial institution when assigning the credit guarantee to the US bank. And for financial institutions, Tim, who you're going to hear with shortly, his group will vet the financial institutions. And generally that entails providing financial statements for a few years, as well as identifying certain items like shareholder ownership, management structure, organizational structure, all of those things, as well as taking a look at the regulations in place for a given country. And so how do we know if we have an opportunity for a GSM 102 transaction? So some items to look for are a U.S. exporter wants to do business in a riskier market and needs payment assurance. An importer is seeking to buy U.S. ag products, but maybe lacks financing tools because this is one additional tool to help facilitate ag trade. A U.S. exporter and importer may have an existing relationship, so they could be good candidates for this program. And a U.S. exporter could be unable to provide additional financing assistance to an importer for increased sale. This is where our program could help out. And keep in mind, GSM 102 is not just for bulk commodities. We also support shipments of intermediate and consumer-oriented products. It's not just for large dollar value transactions. We've seen transactions for a few $100,000. It's not just for large companies. We also have independent exporters and small and medium-sized enterprises. And the only fee that USDA and GSM 102 charges is the guarantee fee. So USDA doesn't levy any interest payments or anything of that nature. And now I'll turn it over to my colleague to discuss the facility guarantee program.
Thank you, Jeff.
Yep, Tim, and then just I'll kind of go through the slides at your pace, but just let me know if you want me to advance the slide if I don't.
Yeah, I'll give you a nod or something.
Sure.
The facility guarantee program, as Jeff mentioned at the start, facilitates financing of manufactured goods and services. The USDA has had this program in place since 1997. It's updated its regulations in 2008 and more recently in 2016. Jeff, next slide. Like GSM, the FGP program, Facilities Guarantee Program, is for emerging markets focused.
Tim, we can't see the slides.
Oh, you're unable to see the slides?
That's correct.
I can
All right,
see
let
them.
me stop sharing and
I
share
can
again.
see them as well.
Yeah, I can see
Okay.
them. So
Oh,
I'm
yes,
not
can
sure.
I? Oh, okay.
My apologies.
Yeah, because I'm still, I still have my screen share up.
Yeah, we can see it.
So the FGP program is designed to facilitate the development or improvement of agricultural related facilities in emerging markets, and they must be agriculture related, and facilitate primarily for U.S. commodity exports. It's letter of credit based. Credit terms are up to 10 years. However, we could offer shorter tenors depending on countries, depending on the risk consideration. Our fee calculator is very handy, and it is online, and it shows fees for anything up to 5 years. So we would cover 85%, and there would be an initial payment of 15%. So we'd guarantee up to 85% of the project, which is standard for project finance. Next slide. So there's 4 different parties to an FGP. There's the exporter seller, which would be based in the United States. There's the U.S. financial institution. There's an approved financial institution in the Middle East and North Africa region. And there's the importer or buyer, which would be local to the country. So for each one of them, for the exporter and seller, you have to make sure that you're qualified to use our program. For the U.S. financial institutions, the same way, and the same thing with the foreign financial institution too. The only caveat with the importer buyer is that there's no pre-qualifications. Next slide. Benefits for the program, and I'll just highlight them. U.S. exporter seller is generally to expand the export sales or to establish sales in a new market. The benefits for a U.S. financial institution would be to extend credit lines with non-U.S. banks. The major benefit for the foreign financial institution is the ability to borrow up to 10 years tenors. And finally, the major benefit for the importer buyer is to improve the facilities or in infrastructure. Also, you may receive preferential terms from your local bank, and this is very important. It's also important for GSM. We highly stress the importer work with the approved foreign financial institution in the region, because you might be able to receive more advantageous terms for a GSM or FGP. Next slide. Eligible destination countries in this region include Algeria, Saudi Arabia, Tunisia, the UAE. It's also important to note that any approved bank by the USDA can issue a letter of credit for any transaction in any approved country, which is very different than to GSM. Next slide. Program eligibility is USDA must project that the transaction will primarily benefit U.S. commodity exports and will consider the following in making a determination. Generally, it's above about 51% has to improve the U.S. agriculture exports. USDA must determine that the transaction will not have any negative environmental or social aspects, and should a project be submitted, you're going to have to submit an environmental or social statement about how this will not hurt the environment. Next slide. USDA's payment guarantee can cover manufactured goods, U.S. services, and non-U.S. goods if the services are not available or not practical. Next slide. Some sample transactions that could occur would be construction or improvement of soybean crushing facility, construction or improvement of cold storage facility, which is very important at the ports, or as well as U.S. engineering services used in the development of a new facility. So it's both new and an improvement to a facility too. Next slide. How to get started for the importers and buyers. It's very much like GSM, where you negotiate a contract and you have that relationship established. For the exporter seller, it's filling out the letter of interest or initial application, as well as filling out the final application. And I'll stress that both of those, both the letter of interest and initial application, they can be found on our website. Next slide. How to get started for this slide is very much like the GSM slide, so we'll just we'll go on to the next slide. It's important to remember that the USDA provides payment guarantees and not loans. And the payment guarantees it's just much like project finance. The payment guarantees are tied to specific events, where milestones are met. The importer or buyer must open a letter of credit with the pre-approved bank, and the USDA covers the exporter in the case of non-payment by the approved bank issuing the letter of credit. Finally, the transaction must be projected to primarily benefit U.S. agricultural exports. Next slide. Here's a list of helpful websites, and I'll note that the first two are very important, listed there. GSM 102 program and FGP program both have more information on both those websites contain more information on our two programs. Next slide. And finally, there is our contact information.
And that ends our presentation on GSM 102 and the Facility Guarantee Program. So we'd be happy to take any questions if there are any.
Why don't we go through the rest of the presentation and then come back to questions here after the last two presentations, if that's okay.
That's
I just don't want to go
fine.
down. I want to make sure that all the other speakers get a chance to speak. So Jeff and Tim, thank you so much for that. Next, we're going to hear from Martin Sieber of the U.S. Livestock Genetics Export and Dr. I'm sorry, I forget the wrong name, Gerardo Casadorf of the
Correct.
Livestock Export Association of the USA. Martin and Gerardo will share more information about how the credit guarantee program has been applied to live cattle export from the U.S. The floor is yours, gents, please.
Welcome from U.S. Livestock Genetics Export, Incorporated, or also called USLGE. I'm Dr. Martin Sieber, the President and Chief Executive Officer. I will make just one very brief comment before I turn it over to our speakers. USLGE is a nonprofit trade association that represents a broad base of livestock organizations in the United States. And today the focus is on people who are actively working in that market. And I am not quite sure who will do the introductions, but I will go ahead and introduce Dr. Gerardo Quastorf if it hasn't been done before. Dr. Quastorf is currently the Vice President of the Livestock Exporters Association of the USA. Dr. Quastorf is a livestock advisor with more than 20 years of domestic and international experience in the dairy and beef industries. He was responsible for the U.S. Holstein Association International Marketing Program from 1989 to 2010. Since 2010, he has joined as a consultant for TK Exports, TK Agri-Tech Services, and the Virginia Agriculture in developing market opportunities for U.S. dairy and beef genetics. He shaped practical programs overseas that are designed to improve the competitiveness of U.S. livestock genetics, as well as the profitability of dairy and beef producers in international countries. I would like to turn it over now to Dr. Gerardo Quastorf.
Okay, thank you. Let me try to Can you see me?
Yes.
Can you see the screen?
Yes, we can.
Okay. Thank you very much for this webinar and round meeting. My name, as I said, is Gerardo Quastorf, and I've been involved with the dairy and beef business for many years. I was asked to provide an opinion, some considerations, and some thoughts about importing genetics from the United States. I was also asked to provide some information regarding what cattle will perform in hot climates. As you can see from my background, behind me are the U.S. Livestock Genetics members represented by their cattle, beef cattle, and dairy cattle. I have two posters there, and those are the cattle that we will have available for exporting, in this case, to UAE. We believe that the cattle will perform well in hot climates. The reason is because the United States has different different type of management, different type of climates. So as long as you use good management appropriate for those conditions, you will have good success with the cattle that we provide. The United States difference from other countries, the cattle, the registration or the follow of pedigrees is voluntary. So most of the populations that you will find in the United States is commercial oriented. In other words, in the case of dairy, the main income is if the main income is the sale of milk, most of these dairies will keep their animals not enrolled with the breed association. That doesn't mean that those animals are not purebred. Yes, they are purebred. Most of the animals will have 2-3 generation pedigree, which is the information that you probably will need it in order to take advantage of future generations. The United States female population is the strongest in the world. That applies for cows, heifers, and beef cows and heifers. The strength of our genetics is in the female population. Most of you, in the case of United Arab Emirates, but most of the world use American genetics in the bulls as semen. However, the heifers produced and raised in the United States are still superior because the strength of our female population. Now, because the female population, cows, beef, and dairy, are not enrolled in the breed association, most of these animals will have information on on-farm record systems. In order to find out that information, there is new technologies that we like to offer opportunities to breeders or buyers in UAE. And that is the utilization of genomic testing. Genomic testing, genomic is a measurement of the genetic code of animals. Animals tell us what they are now, instead of predict what might be or what could be. So most of the cattle that will be available for UAE will come from commercial dairies. When you import from the United States, or import from any country actually, there are two factors influencing the eligibility of the cattle, which are animal health requirements and genetic requirements. The animal health requirements are determined based on an agreement between the veterinary services from the exporting country and the veterinary services importing country. The higher the number of diseases that you want to describe in that animal health requirement, will be more difficult for us to fulfill the need of cattle for UAE. In the case of United Arab Emirates, for example, they do have some diseases that will prevent us or restrict us to select cattle from certain states. Name it blue tongue. That doesn't mean that the animals will show problems. It's just they will react to being exposed to that particular vector. In regarding genetic requirements, which are the genetic specifications, that's the other factor that will will enhance or will prevent to you or reduce to you the possibilities to import genetics. Our cattle. Most common requests are milk production, at least 10,000 kilos of milk in the dairy, fat and protein, and a good functional animals. The easier the requirements, because the superiority of our genetics will allow us to get plenty of animals from this country. GSM 102 will be one of the systems and programs that you can use for that. So How do you import genetics from the United States? You have two options. One is to use a non-pregnant heifer, which is about 8 to 12 months old. That animal will be DNA tested, and it will be the most efficient and cost-effective way to import high-quality genetics. This will allow the local buyer to breed the animals with available bulls for heat tolerance. There are, in the case of Holstein, already in the market some heat tolerant bulls. There are not many heifers heat tolerant Holsteins in the United States yet. They're still too young to be available for the markets or exporting overseas. But American AI, artificial insemination centers, will have in the lineup some heat tolerant bulls for you to use. The other option is to work with an exporter and import pregnant heifers. Those animals, again, will be genomic tested in order to find out the performance and the parentage verification. This is a little different than exporting non-pregnant heifers because the different way that American dairy producers are working today. American dairy producers are testing their cattle early in the year, early in life of the animals, I should say. So by the time there is 6 months, they're making a decision, what should they do with that heifer? The top 20% or so of those animals will stay at the farm. For export purpose, they will be the rest of the animals. However, those animals probably will also be bred with beef semen. That means that if UAE wants to import genetic, in particular dairy, we'll have to reach a contract with an exporter way in advance, at least 4 months, in order to be able to get animals bred with dairy semen instead of beef semen. I'm not aware if UAE will accept animals, dairy animals bred with a beef semen. However, there are many options that we can offer as an exporters to UAE. For example, if they are interested to introduce a different breed like Holstein, like Jerseys or any other breed through embryos. There are many options today also with IVF technology that allow that embryos will be at a low cost and available to be used with either Holsteins as the recipients or Holsteins as a replacement heifer. So, in summary, most of the cattle available in the United States for beef or dairy will be the one not enrolled with the breed association. Those animals will be genomically tested for performance and parentage verification. You have the option to import a blend of registered and non-registered animals. You will have the option to use genomic information as the basis for selection for those animals. And most of these American Holsteins, American cattle breeds will perform well in hot climates. We believe if we provide appropriate cow comfort management systems to these animals will do well in United Arab Emirates. Thank you. That's it.
Thanks so much for your presentation, Gerardo. Much appreciated. We're right on schedule here. Let's turn to And Martin, also thank you to you as well. Let's turn to the conversation about the export of live cattle. We'll now hear from Tony Clayton. Tony is the president of Clayton Agri-Marketing, Inc., one of the largest exporters in the U.S., focusing on live animal trade of beef cattle, dairy cattle, goats, horses, sheep, and agricultural equipment. His company has been an industry leader for over 50 years in the international marketing of livestock genetics, and agricultural products. Tony, thank you for joining us today. I just want to answer a question that's been persistent here throughout the webinar. We will endeavor to get all of the slides that everyone has put up to everyone after the webinar. We will work with our USDA friends to make sure that happens. So go ahead, over to you, Tony. Thank you. The floor is yours.
Danny, thank you, and extend my appreciation to FAS for the opportunity to be with you this evening or this morning, wherever you're around the world. You know, my comments will be pretty short, but it's going to be involved as far as the export, the actual export of it, and we have used the GSM program. And regardless of what your interest is today, as for our many potential customers in various countries, if you're trying to bring in dairy cattle, or if you're looking at beef cattle, and then the opportunity of how you're going to bring them in, whether you're bringing in a small shipment of, say, 180 pregnant heifers on an airplane, or 180 pregnant heifers by plane, or bringing in maybe 275 or 300 head of cattle that would weigh 300 kilo by plane, and then all the options that we have for shipping cattle by sea. And as you look at the U.S. market and being cost competitive, you're going to look at shipments of being 1,500 head or larger. And so it gives you a lot of opportunities of either shipping off the East Coast, the southern coast of the U.S., or the West Coast. So you have a lot of opportunities. The things that I've run into as far as my personal experience with in working with customers around the world at the GSM 102 program is not alone, it's a guarantee. We spend a lot of time with clients to get them to understand, you know, the basic introduction of this, and to understand the program and how it works, which I cannot underestimate, of spending time, and there are no silly questions, to understand and understand how the program works. My other recommendation is you've got to involve all parties in this transaction as soon as you can. That way there are no surprises along the way. I mean, we have the buyer and the seller certainly involved in their discussions as we work through the contractual agreements of the sale, but then to bring in the banks. And that's something that, you know, as a livestock exporter, I don't talk the jargon of bankers around the world when they get into the day-to-day ops of talking, you know, of the finance period, the interest, the LIBOR rates, and everything that goes into this. And, you know, the seller, you know, here in the U.S. that participates in the GSM program to be registered in the SAM system, there are things that save time as well. And to be in, so we have an adage on our shipments. We say we plan the trade and then trade the plan. A lot of times when we've been involved as far as with the GSM, we'll have a buyer that really wants to move too quick until everything is done on paper. So, you know, reaching the contractual agreement and reaching the timeline, because we're dealing with a live animal. We're dealing with biology of an animal if she's pregnant, to get all of this to come together. We had an experience in Egypt last year where we had the agreement with the customer, and in about 48 hours, they showed up on our doorstep, unannounced, ready to select animals. And it cannot work that way, because by the time we go and to register the sale, you know, you have to book the vessel to transport, you have to book the airplane, and then work back from those. So you really have to familiarize yourself with the timeline of this product, and to go through all of the paperwork, the approvals, and develop this plan so it's successful on time, and you make a full shipment. You don't have animals that are too far in stage of pregnancy. I want to follow up on just one thing that Gerardo would have said. The dynamics of our industry here in the United States are changing. The days of where you can just show up and we get in a car and travel for 7 to 10 days and to put 2,500 head of cattle together, those days are gone. So it takes much more planning here in the US now to bring your shipment in, and part of those animals to come in and be acclimated to your environment. And you know, if you're in the very hot weather, you know, in June, July, and August, is to plan when those animals are going to arrive. So one recommendation I have is for all buyers, from cattle and products from the US, you're going to have to start earlier than you've ever thought. So I can see where we tell clients of starting in January and February and March for an October shipment, because the days of doing something on short term are over. It's just the changes in our market. There's my contact information. Anybody that would like to follow up with questions, I'm happy to do so. The program is good to use. It eliminates a lot of risk for both buyer and seller, and you have some terms to work with. So I'm happy to answer any questions as we get into the discussion. Thank you.
Tony, thank you so much. It's always really important to hear from folks who have used the program and can validate it and give it the high mark. So we really appreciate that. I'm sure we will have a question or two when we get to the Q&A. Next, though, I'd like to turn to Mr. Agsha Hamid, Assistant Vice President and Relationship Manager at Mashreq Bank, and Mr. Iqbal Kanyari, Mashreq Bank, Head of the International Corporate Division in Islamic Banking as well. Mashreq Bank UAE is an Emirati bank that has used GSM 102 program in the past very successfully. Ali and Iqbal, the floor is yours, please.
So Danny, I think they will not present anything. I think they will be part of the Q&A. So if there is any question directing to them, they will be ready to answer. So
Okay.
I think we should go ahead for the Q&A. Thank you.
Okay, thank you so much. And I know you've been monitoring the Q&A a bit. So if you want to help with that, I would appreciate it. We are at the next point here in the discussion. I turn it over to Jeff and other friends. If there's any you know, specific questions that the audience wants to ask, but I'll just throw open for everyone to a little bit more detail on why should importers be thinking about using this program. And again, I know you've covered some of the broad benefits, but if you could hone in on one or two or three of the most important benefits that you think importers should be using and thinking about when they want to use the program, why it is a benefit. And then we can talk a little bit about, there's some questions here on the financing that we can raise as well. So over to all of you speakers, if you'd like to chime in a little bit here.
Hello, I'm sorry. This is Rana. Sorry for the confusion. I think they will, the Mashreq Bank representative here will just already just to say hi to the group.
Okay.
Mr. Ali, please. Sorry.
Okay, can we go back to the question, you know, about the primary benefits of the program? I want to make sure that the audience really understands from our speakers the two or three key points that they might like to get across again. So I'll go back to Jeff and others who've spoken early on. You want to highlight, underscore, summarize, please, for the audience, Jeff?
Sure, I'll do this with my colleague Tim. So your question is really on the importer side, correct? What are the key benefits for U.S. importers of U.S. ag products under this program?
Yes, sir.
So some of the primary reasons an importer would want to use this is if the importer, so as mentioned, the LC issuing bank does not necessarily need to be within the country that is the destination for the commodity. So a UAE bank can issue an LC supporting a transaction in one of many countries within the Africa, Middle East region. And so some of those countries have varying levels of risk. So there are riskier markets within that region. And so the credit guarantee would help the importer source US ag product that would otherwise be unavailable because of heightened levels of credit risk. And so this GSM 102 credit guarantee is a financial risk mitigation tool. So the US exporter or the US financial institutions may not want to engage in a transaction with a very risky market, but with the credit guarantee that would mitigate that risk and perhaps make the transaction possible. So this could be a financial tool that could help facilitate transactions in markets that are riskier, that have heightened levels of risk. So that is one benefit, is to help importers access quality US ag product where that transaction may not have otherwise been possible absent the credit guarantee because of heightened levels of credit risk. Also, for the importer, this is not a requirement of the program, but depends upon the relationship the importer has with his or her local bank, that is the participating foreign financial institution. There is the possibility that there could be preferential terms, repayment terms for the importer with his or her local bank, that is the participating bank. So as mentioned, that's not a requirement of the program. So participating foreign financial institutions are not required to pass along program benefits to their customers, but depending upon the relationship, that is a possibility. So that's another benefit. And Tim, I don't know if you wanted to add anything to this discussion that you can think of, maybe that I have not mentioned.
No, Jeff, you're spot on about the financing terms. The ability to get, because the importer would already be a client of the local bank. The importer would likely get, better financing terms and say because the bank knows them as a client. But in terms of benefits for the FGP program, for the importer, it's the really the ability to purchase manufactured goods and services, and which allows the local importer to improve society, improve the country, to improve a facility that would be more beneficial to a country that would have already not had financing from the start.
Are there any limits or ceilings on either side that that people should be aware of?
Well, no, I mean, concerning FGP, they're limited to 10-year tenor. But again, as I mentioned earlier in my presentation, we're depending, if the country is a riskier country, we can always not have a longer tenor. We can limit the tenor as an on-needed basis.
Got it. And again, I'm working from some questions here that were prepared in advance. What are some common hurdles that companies face that you, in your experience, any advice that you can give that might be a common hurdle or a common obstruction that comes up that a lot of companies face that's easily overcome if they do this or do that the right way. Any thoughts on that?
Sure. I think with the GSM 102 and the FGP program, so for our credit guarantees, relationship building is incredibly important between all 4 actors in the transaction, because all parties are going to be involved. So I would say relationship building across all 4 entities is incredibly important. As well as, I know there was a question in the chat regarding how can a Tunisian importer participate in this program, because there are currently no Tunisian banks qualified in participating. And so that's a great example of a hurdle that came up in the chat. And the answer to that is that Tunisia is an eligible banking country under our program. We don't currently have any banks registered, but if the business or has a bank in mind that wants to participate, then I would say there'd be that kind of relationship building between the customer and their bank to gauge interest in participating in GSM 102. And then if that interest is there, then having the bank contact Tim directly to undergo the vetting process for to determine if that bank meets USDA's risk criteria for participation in our program. So that is a potential hurdle, not having a local bank within the country that the business is, but that's something that could be overcome.
That's something you guys can work with very well.
And then Tim, I don't know if you wanted to add anything, if you had any thoughts.
Yeah, there's 2 hurdles from a banking perspective. The first hurdle is that sometimes governments have restrictions on short-term tenors. For instance, in Turkey, there's a tax, a 3% tax on all on structured trade for under 1 year, and our tenors in Turkey are 1 year. So that can be a regulatory hurdle, is pretty big. And finally, we have hurdles with U.S. banks. It's sometimes U.S. banks don't want to do business in a country. So, sometimes the pricing doesn't work out. It's too risky. So it's hard. It's really hard, and we're trying very hard to get more U.S. banks approved to have more options out there. But it's really hard to sometimes, because the issue is maybe on the U.S. bank side too.
I got it. And in the UAE specifically, though, is that problem abating or going away? Has the UAE come along in that regard, with regard to how U.S. banks view?
Oh yeah, I mean, UAE is very strong. Major banks do business, GSM business. We did a GSM transaction last year. I mean, it's a very sound country in that part of the world. So I haven't heard anything when I talk to the U.S. banks. I haven't heard anything saying that they don't want to do business, specifically in the UAE.
Excellent. There's a couple questions about cattle. One is, are U.S. dairy cattle prices competitive in the UAE? And then Steve McCarthy had a question. Can you get a little bit more detail about cattle comfort systems noted in the presentation? We currently export subprimes, primals as well, and packaged portion beef into Dubai, and have been approached by our import partners to look into bringing over live beef cattle. We are not yet comfortable with the efficacy of the health safety protocols in an increasingly warming climate. Thoughts, advice. So the first question was about are U.S. dairy cattle prices competitive in the UAE? And the second question about efficacy and safety protocols. Who from the cattle side wants to jump in, or a couple of you, please jump in.
I'll make a couple of comments. The U.S. has been exporting a lot of cattle within that region, even though the UAE has not opened their market to U.S. cattle until June of this year, but you're seeing a lot of cattle from North America go into Qatar. There's cattle into Pakistan. So there, a lot of cattle going into the Mideast, that part of the world, and they're going in and they're adapting. And it's supply and demand. Over the years, we compete against the cattle out of Europe. There are a certain number of cattle that are available from Germany and Holland. So, it's supply, demand, and what you're after as far as U.S. genetics, because we still kind of beat our chest a little bit that we have superior genetics. And Gerardo, I'm sure you've got some things to add.
Gerardo, please.
Yeah, I agree with Tony. Tony, most of the cattle will adapt to foreign climates, because we do have a different the way that we raised our animals. So I believe that we have animals that will provide for everybody in the world the genetic they need. It's up to different management sources or different systems adapted to the local situation that will make those animals success or not. In my experience is that most of the Holsteins, for example, will do well in every climate in the world as long as you manage them well. So.
Okay.
And the other thing is planning about bringing these animals at the opportune time of the year.
Right.
And not in the heat. And then we are subject to more animal welfare regulations as we export. Certain times of the years that we're considered when we drop below the Tropic of Cancer, we're subject to putting less animals on a vessel. Depending on stage of pregnancy, less animals on that. So we are very, very regulated by what we do. And the last thing in the world we want to do is have somebody have a bad experience with the animals that we are exporting from the U.S. So again, it comes back to that pre-planning and for the arrival.
Got it. So a couple other questions, if I could. Will the GSM 102 program undertake a check on an individual purchaser before guaranteeing the loan? And if the buyer fails the test and USDA will not guarantee the loan, are there any fees to pay for the service up to that point? And meant to say credit check here, sorry. And that's from Chris Leggett to everyone in the group. Jeff, do you want to jump in on that one?
So for the GSM 102 program, there is no qualification application for the importer. So the only entity within the transaction who's not vetted. So we will vet the exporter, the U.S. bank, as well as the foreign bank. However, there's no qualification application for the importer with USDA. So any vetting or your customer is going to come from the participating foreign financial institution and the importer. So that's if we're talking about the ability to repay, that's going to be done between the importer and his or her bank. Tim, I don't know if you have anything to add there.
No, your answer was spot on. I mean, it's hard to do due diligence on the importer. So we leave that up to the local foreign bank to do that, especially if they're a client. If they're already a client, you kind of assume that they would have a knowledge of what the business is.
Right, and I guess one thing to add, the nature of the GSM and FGP program is that it's a letter of credit-based program. And so we are issuing the credit guarantee to mitigate foreign bank non-payment risk. So USDA is assuming the foreign bank non-payment risk. So USDA is not taking importer risk. So as Tim and I both mentioned, that's going to be due diligence on importer risk is going to be done by the participating foreign financial institution.
So thank you very much. We worked through most of the questions here, unless someone wants to jump in and ask another one. Unfortunately, we can't ask a question or two that we had for the Mashreq Bank right now on the webinar, but hopefully we can get that to their representatives and they can provide a response to anyone. Mohammed Hamza, I want to offer you and Valerie Brown and Amy Schluscher the chance to jump in here. If there's anything you want to say from the standpoint overall of USDA and the Foreign Agricultural Service, and we, with regard to the webinar. Mohammed, why don't you go first, and then Valerie, if we could.
I think Valerie left, but maybe we have Lucas. Lucas, are you still here?
Okay.
Lucas?
Of course I'm still here and still in the office, by the way. I'm listening in intently.
Yeah.
So no, thank you everyone for joining this. It's a really great conversation, great feedback, and really big thank you to the US-UAE Business Council. You guys have just done a great job pulling us all together. Thank you to my Washington colleagues for going through all of this. Mohammed, I don't know, did we have any technical things we wanted to follow up on? I know we're getting a lot of questions. The one thing I would mention, if we can't answer the question here in this session, I know there are a lot of follow-up questions for Mashreq. Rana, my colleague here, and I forget to mention, we got 4 people in the office here. So Mohammed is joining us today. We have Rana joining us also in the office, and then Farouz, and then our backup admin who does just a great job, Yasmin. So we're all here to help you. If you do have a question, Rana or I can and Mohammed, we can work to put you in touch with Mashreq to try to make sure that question can be addressed. I apologize, they're having a little bit of technical issues, but please do reach out to us. We want to make sure that this session has been helpful, instructive, and that we follow up on any opportunities you're seeing with any of the speakers today, as well as with Mashreq, to make sure that we can get GSM going and really having an even bigger impact here in this region than it does today. It's a great program. Many people mentioned, the benefits. I used to work in trade, and I wish that my employer had been able to take advantage of this program. It can truly have it can be a great method to manage credit risk. Again, as many have said, there are no qualifications for the foreign buyer. That due diligence is done by the foreign bank and by the individual U.S. exporter. It is an amazing program for the reason that you can have a company that is trying to buy U.S. products, a transaction that just won't make, that can't happen. And because of this program, you can complete that transaction. And it helps the U.S. exporter handle the risk that's present in all of our markets, putting a cattle on a boat or an airplane and sending it all the way overseas. Boy, I mean, what can go wrong? A lot can go wrong. Thankfully, we've got experts on the line that know how to do this and that are great at this. And this is just one more way to manage some of that risk that's always present in any international transaction. And I would say from personal experience and from history, it can be quite competitive. If you look at the companies that use this, they're all big global companies, well-respected, well-known companies. They're not using this because it's costing them money. They're using this because it is a good, sound financial option. It's just a little complicated. But we stand ready to assist, to explain, and to help you access this program and really use what USDA is trying to provide to the maximum benefit. With that, Mohammed, I'll hand it back to you. I don't know. Again, please reach out to us with any comments, concerns, and questions out of this session. And again, thank you so much for everyone for working to collaborate on this and for sharing.
Yeah.
Mohammed and Rania, go ahead, Mohammed. I'm sorry.
Yeah, no problem. Thanks, Lucas. I think we covered all the questions on the chat box. Jeff, thank you, Jeff. You did a great job. He answers the majority of them. And Danny, thank you. All of them you have addressed here. We don't have any more questions from the participant. But anyway, as Lucas mentioned, if we have any question, please send it to us. We are more than happy to answer it. A lot of people here ask about the presentation. We confirm again, this will send to you. We will send a copy of the presentation right to your inbox. For question in terms of Maastricht Bank, we will just send it to us and we will deliver it to Maastricht Bank and get you some more information. Thanks everybody for joining this. I hope this was very beneficial for you, and looking forward to hear from everybody here on any question, any request. We are ready to do it. Thank you. Thanks, Danny.
Yeah, Mohammed and Rania, thank you. And Lucas, thanks for that great wrap up. We were honored to help host this panel. We have a number of member companies that we're working with in the food security space, including a leading company that deals with sanctity or surety, if you will, of the livestock chain called Herdex out of the United States. And so this is a really important and timely panel for us to host. And again, you heard how to get more questions, more answers to some of the questions that were raised. I want to wish everyone a good evening in the UAE and a good morning here in the United States. Have a wonderful day. Have a wonderful holiday season. Take care and all best wishes.
Thank you.
Bye-bye now.
Bye-bye.